So guys, December has turned into quite a way to close out the year. This month has been by far my worst month in the market this year. Taking a look at my portfolio here on Robinhood, we can see I am down just over 5.5%, which is $1,700 for December alone. We can see there has been a steady decline from the get-go, with some recovery midway through the month, with my biggest loss being $1,000 over a 3-day period. The reason for this is news from the Fed coming out saying there will be less cuts in 2025 than they initially thought. There were supposed to be 3 rate cuts in 2025, but after the news, it's come out that there will only be 2. The reason being is that inflation is not going away and looks to be sticking around. While inflation is coming in a lot higher than expected, they will look to slow the rate at which they cut the federal fund rate. The reason this affects the stock market in a negative way comes down to a few reasons. When interest rates are up and stay up, borrowing money for companies is a lot more expensive. The more interest a company pays, the less profit they make. This in turn affects the predicted earnings, therefore causing the stock price to drop. Similarly, high interest rates lead to consumers spending a lot less money. Loans for cars, homes, and big ticket items become more expensive. People tend to spend less or not at all, thus affecting companies' revenues and lowering stock prices. Another reason is as interest rates are high, items like bonds and CDs offer a greater interest rate with less risk. Therefore, consumers choose to sell stocks and invest in bonds and CDs, thus creating less demand for stocks and lower stock prices. These are my 5 biggest losers this month. Atkr are coming in first, just below 12%. Ford down almost 11%. Vici coming in at 10.4%. PEG at 9.5%, and Ultra Group at almost 9%. I do have some companies that are up. Both QQQ and JetQ are up just over 1%. With these drop in stock prices, it can cause really good buying opportunities. This is something that big investors like Warren Buffett have continued to talk about over the years. With cheaper stock prices, you can buy more shares with the same dollar amount. This is a good way to enhance your position in a company at a better valuation. And for dividend investors, this is perfect, because as stock prices drop, dividend percentages go up, creating a better cash flow. As we can see when looking at my portfolio, there are plenty of opportunities. There are 4 companies I'll be focusing on in the coming months. I'll be looking to pick up some shares in Ford, Atkr, Realty Income, and Vici Property Group. Ford is down just under 11% this month, and a total of 18.1% year to date. Ford's dividend yield is currently above the 5-year average. If we take a look at my portfolio, I currently own 191.43 shares at an average cost of $11.56. This puts me down 14.53% and 14.29% including the dividend. Atkr is currently down 11.81% for the month and 47.87% year to date. Atkr does not have a 5-year dividend yield average, as they only started paying dividends in 2024. If we take a look, I currently own 17.19 shares at an average cost of $103.03. This puts me down 19.73% and 19.30% including dividend. O is currently down 7.15% this month, and a total of 7.84% year to date. O's dividend interest rate is above the 5-year average. If we take a look at this spreadsheet, you can see I currently own 16.54 shares at an average cost of $55.92. This puts me down 5.70% and 3.85% including dividend. Vici Property Groups is currently down 10.2% for the month, and a total of 8.64% year to date. Vici Property Group's dividend yield is currently above the 5-year average. As you can see, I currently own 57.71 shares at an average cost of $30.39. This puts me down 4.54% and only 0.59% including dividends. Thank you for watching. If you're interested in following along my dividend journey, subscribe and like the video. I'll see you guys in the next one. Goodbye for now.